What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is December 10th of 2020. Well, folks, I hope you are having a fantastic day wherever you are. And in today's video, I want to spend some time to show the dichotomy between what's going on in the traditional world of markets as well as what's going on in cryptocurrency markets. I think it's very easy for a lot of people to get caught up in these kind of short-term moves in the market where either cryptocurrency markets aren't moving straight up to the upside or going straight vertical, or if they're pushing sideways and possibly pulling back a bit from their recent relative highs. So let's go ahead and talk about that here real quick over the next few minutes. I want to start here as we take a look over the last 7 days here. Obviously, the vast majority of the market here is in the red following Bitcoin's correction from around the upper new relative all-time highs of around 19K downward towards around $18,000 at the moment. However, let's go ahead and talk about what's going on in traditional markets first. It's not something we usually do. We usually just dive straight into crypto markets, but I think it's important for this. First off, just recently, the ECB, the European Central Bank, which is already leading the way against other world central banks in the sense of total dollar-denominated stimulus in this case, not really per se in dollar terms, or really just in dollar terms in this case, but not per se denominated in dollars. We've seen the ECB is boosting its emergency bond buying program by 37% to $1.85 trillion amid the pandemic resurgence in the EU. So yet again, the EU is trying, the same stimulus tactics that it's been trying to do for the last, last decade or so, more than the last decade, since back in 2008. So they're going ahead and boosting their bond buying program by 37%. Let's just take that into account here. Let's go ahead and take a look at where the ECB already stands here when it comes to other world central banks. The ECB is well beyond by over more than $1 trillion against the Fed, more than $1.5 trillion against the Bank of Japan, and well over $2.5 trillion against the People's Bank of China, which is now finally starting to experiment and dabble in the world of stimulus in a world post-COVID. Let's take a look here at the UAE. UAE business conditions worsen for the second straight month. So the UAE, which has already been struck by all of the effects that are going on in commodity markets, the general lack of growth in the global economy, the financial sector, and now we're in this position here where the UAE is in its second straight month of decline. So it's other random regions of the world that you might not think to look at that are suffering and taking pain here at the moment. But let's see if there's anyone else. Well, Mnuchin here in the United States, just over the last few hours, has come out and stated that he would be in support and favor of likely basically stepping back on certain reforms or changes that we enacted on Fannie Mae and Freddie Mac. You know, the two major companies that were government-sponsored entities that basically led a big portion of what happened in 2008, or really what was building up in the mid-2000s that inevitably led to the housing market crash that really hit back in 2006 and 2007. So all these things are going on the world stage right now, things that have trillions of dollars ramification that will probably cause a pretty substantial pullback here in regards to a lot of major parts of our economy. Whereas Bitcoin here, though it may seem dramatic here on the daily chart, going from almost nearly 20K down here to 18K, is really just a bump on the road and steps away from the all-time highs. We got to stop the FUD, guys. We got to stop thinking about these short-term moves. This is something that you guys will constantly see on my channel. I love when people join on my videos and stuff and we have these conversations. Sometimes it's really good to hit on similar points that we've hit on in the past. But it's simply the fact that there's so many things going for Bitcoin and other cryptocurrencies as an asset class as a whole that don't really have me worried. The macro perspective is setting the environment here for Bitcoin. And just because Bitcoin moves down on a single day, or it moves down for a week like it has here, really doesn't bother me that much. So again, what we've even been doing here is setting these higher relative lows, higher than what we set back here in November after our most stark pullback since September. And along with that as well, following in that pattern here since all the way back in November. And if you really want to be honest, if you're not just talking about trend lines and you're talking about relative higher lows, we've been doing that since all the way back here in September of 2020. Stepping back even further, we've been doing that since back here in July. We've been doing it back here since April. So what's my point here overall is that, well, it tends to be that you don't want to bet against Bitcoin setting in new lows or new significant lows like we set here and what we've been setting here and here. And that's why we've got these two trend lines where it paints the optimistic case scenario and probably, if anything, the worst case scenario, where Bitcoin can maybe drop somewhere to 16 to 17K at worst. But right now we're holding on this green line, and who knows, if we were able to actually go sideways after breaking this green line, we might not see much price decline at all. We might just be seeing a bit of stagnation. A cup here, a cup and handle in this case. A cup where you have the top of the price here from the previous all-time highs, a retest, a cup, a handle, and then a breakout. That could very well be what we're going to see here in regards to Bitcoin's price. And along with that as well, altcoins are signaling this. Altcoins, which could have broken through the other day, have actually been holding at a relatively higher level than where they set in the sense of their dominance back here on November 25th. And we actually broke it to the upside here. It's a matter of getting above this yellow line for significant confidence. But let's just take a look at market cap here, guys. The overall market here is looking swimmingly well. What seems like a severe pullback is really less than a $50 billion, or I would say about a $50 billion pullback in total from the absolute peak. But if we take a look at roughly where valuations were back here, just back over 3 months ago, or under 3 months ago, to be frank, we're already up more than $200 billion in market capitalization across the entire crypto space. There's been a ton of value creation. And even as there's been a market pullback here, utilities and applications like DeFi have continued to maintain their dollar value towards their relative all-time highs. It took a bit of a hit here in the sense of the Ethereum. It would actually be higher if it weren't for ETH 2.0, where a lot of the Ethereum fled to during the fact that right now ETH 2.0's yield is quite enticing towards some of the money has left the DeFi space. The overall Bitcoin and DeFi holding relatively steadily. And this is when there's no hype going on right now in the DeFi market. So I think there's so many great signs going on here, guys, in regards to market development. Now, there's a few other key things I want to talk about here real quick before I wrap up the video, guys. First off, if you don't know already, Unibright is doing a major event today, Baseline as a Service demo, which is basically going to be going through and demoing the actual Baseline protocol, showcasing how for major enterprise companies you could benefit from Baseline. If you're interested in enterprise blockchain like I am, I've been working with the Unibright team for a long period of time, back since in April in 2018. And in this case, I highly recommend you check out what they're doing, what they're all about here, and what Baseline is aiming to do as an overall protocol or standard for enterprise. And you can check out the link down below in the description if you want to sign up for that webinar. It's going to be later on today. And outside of that as well, we've got a quick announcement in regards to the Warp protocol. If you guys haven't checked this out, this is a really interesting protocol that I've been keeping my eye on. There's not many DeFi applications that I'm excited about, but simply put, Warp.Finance is aiming to provide a way for liquidity providers on automated market makers like Uniswap, where there's billions of dollars of liquidity locked up, to take their LP tokens and be able to actually lock them into the protocol as collateral, a better form of collateral. So you've got half stable coins and half crypto, so it's much less likely to face a liquidation event. And in that case, be able to use it to take out loans for stable coins across the market, from USDC to DAI, etc. So I highly recommend you guys check out this event they're doing right now, where they're basically encouraging people to lock up liquidity or LP tokens into the protocol early on. And in this case, there's a really cool team event we're doing. So if you want to join my team for the event, you can do so at the link down below in the description. It's a referral link to the overall platform. All right, guys, that's it for today's video. I really appreciate you all making the time, guys. Above all, don't get caught in the red, guys. Don't get fearful in this market. To be honest with you all, I'm focusing on averaging in if I've got some available fiat on the side. It's not something I'm stressing about. My positions are being set in place so that I can hopefully benefit over the next, 5, 10, 12 months. I want to see what happens over the next year. I think we're going to be full swing into the next bull market, and I'm excited to be here on this journey with you all. There's so much opportunity around us. And when we kick off that altcoin cycle, it's going to be a matter of whether or not you're already positioned in or you're falling into it later on. We're at the part of the game here and the overall cycle where it's time to focus on finding those opportunities before that major wave comes in, because it's going to throw all of us off, even for those of us who are intending for it to happen. All right, guys, that's it for today's video. Thanks so much for watching. If you liked it, drop a like, and I'll see you guys in the next video. Take care, everyone.